Hello and happy Friday, everyone, if you can call it that, because crypto just woke up this morning and said, let's test your mental health one more time before the weekend. Bitcoin has dropped into the $83,000 range, officially the lowest level since spring, and every major chart looks like it slipped on a banana peel. Solana, $127 and falling like it saw a ghost. Ethereum, $2,731, also down. XRP, even XRP said, yeah, bro, I'm part of the pain too. It's basically red across the board, a synchronized swimming event, except everyone's drowning. And it's not just today. This was a brutal week. Over $1 trillion wiped from crypto markets, unemployment ticking up, whales shuffling coins to exchanges, regulators cracking down, Congress proposing Bitcoin tax payments, and the internet going nuclear over the Epstein file release. So today, we're doing the big one, the Friday end-of-week breakdown, everything that happened, everything it means, and everything you need to watch going into the weekend. Let's get into it.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's dive into the final market recap of the week. And yes, it's another rough one. Bitcoin continues its slide, now sitting around $83,700, officially breaking below multiple support zones and tapping levels we haven't seen since early spring. Stochastic RSI is completely bottomed out, oversold, exhausted. This is the crypto equivalent of someone lying face down on the carpet saying, just give me 5 minutes. And if you're wondering, is this capitulation? Not yet, but it's getting close to the part where people start Googling, what is a real job? Ethereum isn't escaping the gravity either, down to $2,731, with sell pressure hitting 400 million plus in the last 24 hours. It's trading under every major EMA, and the stochastic RSI is also deep in oversold territory. This is the kind of price action where even hardcore Ethereum maxi accounts post inspirational quotes with pictures of mountains. And then we have Solana, down almost 5%, sitting at $127, and somehow still the only chain this week with ETF inflows. Amazing. Institutional investors are buying the ETF, while retail investors are selling the token. It's like a financial tug of war between conviction and panic. The chart is stretched, oversold, and sitting right on the edge of its next potential breakdown zone around $120. XRP is at $1.93, also down, also oversold, also following the broader market. And this is after Ripple scored a massive $40 billion valuation this week with MasterCard news. Imagine delivering great fundamentals, and the market says, cute, down you go. XRP is basically the kid who gets straight A's and still isn't allowed to pick where the family eats. So what's happening across the board? Liquidity is tight, macro is shaky, whales are moving coins to exchanges, ETF inflows slowed, fear index rising, oversold indicators flashing everywhere. This is the part of the cycle where everyone wonders, is this the bottom? And the market responds, define bottom. And keep in mind, this is all happening at the end of a brutal week. We've had over $1 trillion erased from crypto's total market cap, Bitcoin collapsing from the 90s into the 80s, altcoins bleeding for 5 straight sessions, mixed unemployment numbers, no clear signal from the Fed, a UK fraud probe, Congress trying to get paid in Bitcoin, and Trump dropping the Epstein files bomb. It's a miracle you're still here watching a crypto news show instead of meditating in a forest somewhere. And that's your end-of-week market recap. Painful, oversold, and loaded with signals we need to talk about. Up next, today's top stories, including regulators tightening, Congress experimenting with Bitcoin, and why the Epstein file release is now part of the crypto news cycle. We'll get into it after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, for our final flagship show of the week, we've got a stacked lineup. Today wasn't just another red day. It was the plot twist at the end of a very chaotic season finale. Let's start with the story that hijacked the entire internet today. Developers launched a Gmail-style interactive viewer for more than 2,000 Epstein emails pulled from PDFs released by House Republicans earlier this month. So instead of scrolling through 300-page DOJ documents, you can now browse the Epstein archive like you're checking your inbox. Welcome to 2025, where we can't get DMV appointments online, but we can get a polished web app for one of the darkest scandals in modern history. And this ties into the week's narrative perfectly, because on Thursday, Trump signed the bill requiring the DOJ to release even more documents. This new viewer just poured jet fuel on an already raging fire. And now half of X thinks they're detectives. The other half thinks they're in a Netflix documentary. And somewhere in the middle, markets are trying desperately to not panic. Next, a major market signal that most people overlooked. CME futures open interest just hit a multi-month low. This is big because CME is where institutions play. When open interest dries up, it usually means one thing. Institutions are stepping back from leveraged exposure. Translation: we don't want to touch this right now. And who can blame them? We've had unemployment upticks, macro confusion, liquidity crunching, $1 trillion wiped from crypto, and whales panic moving Bitcoin to exchanges. This ties directly into the week-long theme. Liquidity is disappearing. Not because crypto broke, but because institutions are de-risking. Okay, Robert Kiyosaki posted today, "The crash is here. Buy Bitcoin. Fiat is dying. Be smart." Classic Kiyosaki, the only man who can say the world is ending and sell you a book at the same time. He is the human embodiment of markets crashing? Perfect. Time to promote my next seminar. But his timing fits this week's overall mood. Everyone is spooked. Everyone is confused. And whenever macro plus liquidity plus emotions all collide, Kiyosaki appears like a summons spell. And now, the biggest revelation of the entire week. Tom Lee finally explained why this entire crash happened. And according to him, it wasn't a blockchain problem. It wasn't a protocol issue. It wasn't whales. It wasn't ETFs. It wasn't a hack. It was a bug in the liquidations code on Binance. When the stablecoin USDE depegged to 65 cents on October 10th, Binance's automated liquidation system misread it as a systemic collapse. And because the system used a single internal price feed, it triggered a wave of incorrect collateral liquidations, dumping positions en masse. Result? 2 million plus accounts liquidated. Bitcoin nuked from $125,000 to the $80,000 range. Market makers withdrew. Liquidity evaporated. Chain reaction cascades everywhere. It was basically a flash crash born from a rounding error. Crypto isn't dying, but some engineer at Binance definitely hasn't slept since October. And today, CoinGuero highlighted that one DAT is still the biggest risk in the market. DAT meaning data, automation, and triggers, referring to over-reliance on automated liquidation and price feed systems. That matches Tom Lee's explanation perfectly. Two major voices from completely different angles, both diagnosing the same systemic weakness. Automation is powerful until it freaks out over a bad number and liquidates the economy. Now, here's where it all connects. This entire week, we've seen regulatory crackdowns, macro uncertainty, mixed unemployment data, institutional hesitation, whale sell flows, privacy coin rotation, ETF outflows, $1 trillion wiped off the market, Congress flirting with Bitcoin tax payments, Epstein files igniting the internet, and now, Tom Lee confirms the whole crash started from a liquidation code bug. Today's stories complete the puzzle. The Gmail Epstein viewer feeds the political chaos narrative. The CME open interest collapse confirms institutional fear. Kiyosaki's panic tweets reflect public sentiment. Tom Lee's bug explanation explains the mechanics of the crash. Coin Bureau's DAT warning explains the systemic risk going forward. And together, they paint a very clear end-of-week picture. Crypto didn't collapse because crypto broke. Crypto collapsed because everything around it did. And that brings us to our next topic, predictions, where we take the entire week's chaos and figure out what next week might look like. Will Bitcoin finally bottom? Will institutions re-enter? Will code bugs continue to haunt the markets? And is the worst behind us or still ahead? Dissecting it all after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's Nostradamus this thing. Look into the crystal ball, the part of the show where we take this entire insane week and try to predict what next week might look like. And as always, predictions in crypto age like avocados. Delicious for a moment, then chaos. Bitcoin at $83,700 is now deep into multi-month support, and every major oscillator is oversold. Stochastic RSI bottomed. Volume spiking. Volatility elevated. Historically, when Bitcoin hits this combination, oversold readings plus exchange liquidations plus collapsing futures interest, bottoms tend to form within days or weeks, not months. But we are missing one key ingredient: buyers. And if they could please show up any time now, that would be fantastic. The revelation that this week's meltdown was triggered by a liquidation algorithm bug, not fundamental crypto failure, is extremely important. In previous cycles, crashes caused by technical glitches tend to recover faster than crashes caused by fundamental breakdowns. In 1987, portfolio insurance automation caused the crash. The recovery snapped back in record time. In 2010, the flash crash, same story. In 2025, Tom Lee thinks history may rhyme again. The market didn't break, the code did. So unless Binance's liquidation bot has a grudge, reversals could come sooner than people expect. CME open interest collapsing to multi-month lows is a major clue. Institutions aren't dumping, they're stepping back. That means no forced institutional selling, no panic unwind, just hesitation. And if there's one thing institutions love, it's buying fear at a discount. If Bitcoin stabilizes above $80,000 next week, expect institutions to quietly start creeping back in. Solana has the strangest setup of the week. ETF inflows up, token price down. That divergence does not last long. Either A, Solana price catches up to ETF inflow demand, or B, the inflows slow down and the ETF cools off. Historically, the inflows tend to win. Translation, Solana might stop face planting if it decides to cooperate. This week ended with a political tornado. Trump signs the records release, and then today, someone builds a Gmail-style interface for 2,000-plus Epstein emails. Nothing moves markets like bipartisan chaos and tech creativity colliding. This could temporarily shift media attention away from crypto weakness. And historically, when political drama spikes, Bitcoin often becomes the "I'm tired of everything" asset. So yes, the Epstein saga could accidentally support a short-term bounce. I hate that this is true. Next week's macro calendar is light, but not empty. That means markets will react more to sentiment than to scheduled data. And when that happens, crypto tends to move on emotion, not fundamentals. If liquidity stabilizes and selling slows, we might see a relief bounce, rotation back into large caps, early bottoming behavior. If selling continues, then hello, 78,000 to 80,000 Bitcoin, our old friend. Please do not greet it by name. Here's the truth. No one rings a bell at the bottom. No one gets a push notification saying, "Congrats, the pain is over." But we are hitting the same conditions that have preceded rebounds in every previous cycle. Liquidation exhaustion, oversold technicals, institutional hesitation, narrative panic, bad data causing a crash, not bad fundamentals. That doesn't guarantee a bounce, but it does mean next week will be pivotal. So rest up, hydrate, touch grass. Monday might get spicy. And that wraps our prediction segment, the part where math, psychology, and blind optimism all collide. Coming up next, the Week in Review, a rapid-fire recap of everything that happened and why this week will be remembered for a long time. Full barrage after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back to the Week in Review, the master recap, the if you missed anything, buckle up portion of the show. Because this week wasn't just volatile, it was a full mini-series. It started innocently enough. Bitcoin hovered in the low 90s, still bruised, but not broken. The fear index ticked up. ETF flows slowed. People whispered the phrase, "Is this the top?" That was adorable. We didn't know what was coming. Tuesday brought the macro tremors. Yields crept higher. Liquidity tightened. Analysts came out swinging with bold predictions. Tom Lee, Michael Saylor, Raoul Pal, everyone had a theory. It was the most optimistic group therapy session you've ever seen. Then Wednesday arrived, and Bitcoin officially slipped under $90,000. That triggered the first big panic. Liquidations ramped up. Altcoins followed. XRP, Solana, Ethereum, all down bad. This is when people start tweeting inspirational quotes with screenshots of candlesticks. Thursday was the real tornado. We got the U.S. jobs report, 119,000 added, but unemployment jumped to 4.4%, the highest since 2021. The market said, so it's good and bad? And the Fed said, exactly, which helped precisely no one. Crypto X then melted down over the Fed's routine Thursday balance sheet report. Nothing unusual happened, but when everyone is scared, even spreadsheets look dangerous. And then Trump signed the Epstein DOJ files release bill, ending the day with a political nuke. Just another Thursday. And today, Friday, we got the twist. Tom Lee finally revealed the truth behind the entire crash. A liquidation system bug on Binance misread a stablecoin depeg, triggering millions of forced liquidations, collapsing market makers, and sending Bitcoin from $125,000 to the $80,000 range. Not a blockchain failure, not a systemic collapse, not fundamentals. It was literally a misread price feed, a software glitch, a one-line bug that slapped $1 trillion out of the market. If crypto had parents, they'd be grounding it right now for breaking the economy. Then the internet poured gasoline on everything. A Gmail-style Epstein email viewer went viral. CME futures open interest hit a multi-month low. Kiyosaki declared the crash is here. Coin Bureau warned of DAT systemic risks, and Bitcoin fell into the mid-83Ks. All of it politics, macro, code failures, institutional caution crashed into each other at the same time. So what does this week tell us? It tells us crypto didn't collapse because crypto broke. Crypto collapsed because every surrounding system got stressed at the same time. Macro uncertainty, automated trading failures, lack of liquidity, institutional hesitation, political chaos, fear driven by headlines, not fundamentals, technical oversold conditions building pressure. In other words, a perfect storm. The markets didn't need a villain, they needed a nap. And that, my friends, is your week in review, a 7-day saga of bugs, fear, spreadsheets, politics, charts, chaos, and just enough hope to keep us checking our portfolios. Up next, the mailbag and proof of thought. Your questions, your takes, your theories. And trust me, today's messages are good. Reading them all after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back. It's time for the mailbag and proof of thought. Your questions, your theories, your coping strategies. And after this week, we've got some good ones. First up is from @ChartGoblin. Sen, now that we know the crash was caused by a liquidation bug, does that mean the recovery will be faster? This is the million-dollar question. Historically, crashes caused by mechanical failures like the flash crash in 2010 recover much faster than crashes caused by fundamentals. So yes, if this week was caused by a bad line of code, the bounce could be sooner than people think. Assuming, of course, nobody triggers the bug again by accidentally typing a comma instead of a period. Next is from Lena in Salt Lake City. Do you think regulators will use the Binance bug as an excuse to increase oversight? Oh, absolutely. Regulators love a narrative that makes it sound like they're saving people from bad software. But remember, this wasn't a blockchain bug. This was an exchange-level automation glitch. If regulators try to use this to blame crypto itself, that's like blaming airplanes because someone spilled coffee in the cockpit. Next one is from a proof of thought QR submission and reads, does the Epstein email viewer affect crypto directly, or is it just noise? I can't believe I'm saying this, but the Epstein email viewer actually impacts market sentiment. When political chaos spikes, money moves into assets people trust more than institutions. Sometimes that helps Bitcoin. Sometimes it scares everyone. Right now, it's chaos adjacent, which means it adds fear, but also curiosity. Also, the app looks too much like Gmail. I kept thinking I missed a dentist appointment. All right, this one is from @HODLMechanic. Sen, what about CME open interest collapsing? Is that bullish or bearish for next week? Short term, bearish. It means institutions stepped back. Medium term, potentially bullish, because bottoms often form when big players wait for oversold prices, then pounce. Institutional investors are basically cats. They don't come when you call, they come when you stop looking at them. Okay, and @MetaMemeKing asks, so with all this, is the bottom in? Yes or no? I love the confidence behind this question, but no prediction that ends with yes or no has ever been correct. So here's my answer. Yes or no. You're welcome. And our question of the day comes from Michelle in Toronto. How do I stay sane during weeks like this? Great question. And here's the truth. Weeks like this are overwhelming, but you stay sane by remembering this was a mechanical crash, not a fundamental one. Oversold conditions don't last forever. Market fear always peaks before reversals. Crypto is built to survive worse than this. And you're not supposed to check your portfolio every 5 minutes. Also, drink water, touch grass, and do not open your meme coin watch list after midnight. Trust me on that last one. And that wraps our mailbag and proof of thought for this absolutely insane week. Up next, the SENB token update and our end-of-week closing thoughts. Wrapping it up after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, final segment of the week, the SENB token update. And yes, even in a week like this, we've got progress. First, community growth continues. Proof of thought submissions are climbing. More creators are joining in. Engagement is getting stronger every single day. And that's the signal we care about. People aren't just watching, they're participating, even during the market meltdown, which says a lot about this audience. Most of Phase 1 is already live. The Daily Brief, Tucker Carlson guest hosting episodes, character expansions, QR integrations, community pipeline, token infrastructure, brands and cohesion, all online, all functional. You're watching an entire media ecosystem form in real time, not behind closed doors, not after funding, but publicly, with you. And because the community is showing up early, Phase 2 development is starting ahead of schedule. That includes creator submissions, collab tools, SENB utility layers, expanded character content, new interaction mechanics, and more features in the Proof-of-Thought pipeline. We basically have so much momentum, the roadmap is yelling at us to slow down, and we're ignoring it. This was a brutal week for the markets, but an important one for the ecosystem. When markets shake, the projects that thrive are the ones with community, content, culture, direction, and consistency. And consistency is the one thing we can guarantee, even when Bitcoin is reenacting a cliff dive. Look, this week was heavy, emotionally, psychologically, financially, for everyone. But you made it to Friday. You stayed informed, you stayed level-headed, and you showed up here, part of something bigger than charts. And the charts were terrible, so that's saying something. The important part is this. Crypto isn't dead. The ecosystem isn't broken. And even during a $1 trillion meltdown, you're still here, which means you're early, and you're built for this. And that concludes the SENB Daily Brief for Friday, November 21st, 2025. Submit your proof of thought for next week's episodes, recharge over the weekend, and brace yourselves, because Monday begins a brand new chapter. I'm SENB Hero, and I'll see you on the next one. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.